Hey everyone, welcome back to Genai World News. We're kicking things off with one of the biggest financial stories of the decade, and honestly, it's hard to overstate just how massive this is. According to the Financial Times, SpaceX has gone public in what is now officially the world's largest initial public offering, raising a staggering $75 billion in its market debut. That's not a typo, $75 billion, shattering previous IPO records and cementing SpaceX's status as one of the most valuable companies on the planet. The FT also notes that Elon Musk has once again demonstrated a remarkable ability to bend Wall Street to his will, with investor demand for SpaceX shares described as nothing short of extraordinary. Meanwhile, the BBC spoke with Tom Mueller, one of the company's very first employees and a co-founder alongside Musk back in 2002. Mueller, who described himself as employee number one, shared an emotional reaction to watching the company he helped build from the ground up reach this historic milestone. From building engines in a small workshop to ringing the bell on the world's biggest IPO, it's a story that really does sound like science fiction. SpaceX's journey from a scrappy rocket startup to a publicly traded giant worth tens of billions is the kind of story that defines an era, and we are living it right now. Moving now to one of the most closely watched diplomatic situations in the world right now, the conflict involving Iran. As reported by BBC News, President Trump has publicly claimed that a, quote, great settlement to end the conflict with Iran has essentially been reached. Trump's comments sent shockwaves through diplomatic circles and financial markets alike. But, and this is a big but, Iran is telling a very different story. Iranian officials are pushing back firmly, describing reports of any finalized agreement as, quote, speculative, and making clear that as far as Tehran is concerned, nothing has been locked in. So where does that leave us? In diplomatic limbo, essentially. The BBC report highlights the stark contrast between the optimism coming out of Washington and the cautious, almost dismissive tone from Iranian leadership. Adding another layer of complexity, the Financial Times has separately reported on Iran's network of underground missile facilities, what the FT describes as missile cities, noting that weeks of U.S. bombardment appear to have only temporarily suppressed Tehran's military capabilities. Iran's missile infrastructure, buried deep underground, remains largely intact. The gap between Trump's deal talk and Iran's denials, combined with a military situation that's far from resolved, suggests this story is nowhere near its final chapter. We'll be watching this one very closely. Across the Atlantic to the United Kingdom, where fresh economic data is painting a worrying picture. The Financial Times is reporting that the UK economy actually contracted by 0.1% in April, a figure that, while small on paper, carries significant weight given the broader context. The FT notes that both businesses and households are feeling the squeeze from higher energy costs, which are putting a serious dent in spending power and corporate margins. This contraction comes at a particularly sensitive time for the UK government, which has been attempting to project an image of economic stability and growth. A shrinking economy, even by a fraction of a percentage point, is not the headline Prime Minister Keir Starmer's team wants to be dealing with. For ordinary people across Britain, this data point reflects a reality many are already living. Energy bills are up, costs are high, and the economic headwinds are real. The FT's reporting underscores how energy price pressures are rippling through the entire UK economy, from small businesses struggling with overheads to families cutting back on discretionary spending. Whether this is a brief blip or the start of a more sustained downturn remains to be seen, but it's a number that policymakers and market watchers will be scrutinizing very carefully in the weeks ahead. Let's talk central banks, because on both sides of the Atlantic, major monetary policy moves are in play. First, to Europe. The Financial Times is reporting that the European Central Bank is tightening its policy course, signaling a more hawkish direction as it navigates the complex landscape of inflation, debt restructuring, and what the FT describes as a broader global shift away from dollar-dominated finance, or de-dollarization. The ECB's move reflects growing concern among European policymakers about long-term financial stability as government borrowing costs remain elevated across the continent. Meanwhile, in the United States, the Financial Times is also highlighting the high-stakes debut of the new Federal Reserve Chair, Kevin Warsh, who is about to preside over his very first rate-setting meeting. And here's the key takeaway from the FT's analysis. Any expectations that Warsh would walk in and immediately cut interest rates are firmly off the table. Markets have been hoping for a more dovish pivot, but the FT makes clear that a rate cut at this inaugural meeting is simply not happening. What Warsh signals about the future path of U.S. monetary policy, his tone, his language, his priorities, will be just as important as any actual decision. Both the ECB and the Fed are sending a message. The era of easy money remains firmly in the past. Now to a story with deep human impact. BBC News is reporting on a growing wave of Palestinian anger in occupied East Jerusalem, where Israeli authorities have been stepping up the demolition of Palestinian homes. According to the BBC's reporting, these homes are being torn down to make way for a park, a development that has devastated affected families and drawn fierce condemnation from Palestinian residents and rights groups. One resident quoted in the BBC's report described the demolitions with heartbreaking directness, saying the authorities have, quote, destroyed the future. The BBC notes that these demolitions are part of a broader pattern of property destruction in the area, and the scale appears to be increasing. For the families losing their homes, often with very little notice, this is not an abstract policy dispute. It is the loss of everything: shelter, roots, community, and hope. The situation in East Jerusalem remains one of the most contested and emotionally charged aspects of the broader Israeli-Palestinian conflict, and stories like this one are a reminder of the very real human cost being paid on the ground. International human rights organizations continue to raise alarms about the pace of demolitions, while Israeli authorities argue the constructions being demolished are unauthorized. The gap between those two narratives is where thousands of real lives hang in the balance. In trade and industry news, Europe's automotive giants are circling the wagons. The Financial Times reports that Renault has joined Volkswagen and Stellantis in calling for a coordinated Made-in-Europe industrial strategy, a direct response to the mounting pressure from Chinese electric vehicle manufacturers flooding the European market. The FT notes that the car industry is divided on exactly how Brussels should respond to this challenge, but what these three major automakers agree on is this: European manufacturing needs protection, and it needs it now. Chinese EV makers have made dramatic inroads in recent years, offering competitive prices that European manufacturers are struggling to match. The push for a unified European response reflects growing anxiety not just about market share, but about the long-term survival of Europe's automotive industrial base, which employs millions of workers across the continent. Whether the EU can craft a policy that protects domestic manufacturers without triggering a full-blown trade war with Beijing is the central question. And it's a question that will have enormous consequences for workers, consumers, and governments from Paris to Warsaw. The Made in Europe campaign is gaining momentum, but translating that slogan into effective policy is a very different challenge. Definitely a story to keep watching as EU trade negotiations evolve. We've got two sharp market-moving stories to round out today's coverage. First, the Financial Times is reporting a notable surge in mainland Chinese investors opening bank accounts in Hong Kong. The FT says some mainlanders are concerned about losing access to investment products that offer higher returns, a worry apparently linked to increased financial restrictions from Beijing. The rush to establish Hong Kong accounts reflects a broader anxiety among Chinese savers about where they can safely and profitably park their money as the regulatory environment on the mainland tightens. It's a fascinating window into the private financial calculations millions of Chinese citizens are making right now. And separately, on the European defense front, the Financial Times reports that a sector that has been one of the hottest equity trades of the past couple of years is now going sharply into reverse. European defense stocks, which had surged dramatically on expectations of massive military spending increases, are pulling back hard. The FT cites higher government borrowing costs and evolving battlefield realities as key factors cooling investor enthusiasm. The lesson here? Even the most compelling investment themes can run into the wall of fiscal reality. That's a lot to chew on for global investors today. And that, folks, wraps up today's edition of Genai World News. If you found value in today's coverage, please hit that like button, subscribe so you never miss an update, and drop a comment below. We want to know what stories you want us to dig into next. Stay informed, stay sharp, and we'll see you in the next one.